You are listening to the Winners Ways podcast with Bola Alabi, episode number 53.
Would you like to win and achieve success at what you do? Welcome to the Winners Ways podcast, where we create winners every day. And now, your host, the author of Winners Ways book and life coach, Bola Alabi.
Hey everyone, welcome to another episode of the Winners Ways podcast, where it's all about your career, your money, and the motivation to live life to the fullest. This is episode 53 of this podcast, and today is about listeners' questions. From time to time, I get asked career and financial related questions. So today, I just want to talk about one of the questions that I was asked recently. I know some of you may be in a similar situation, and I want to guide you so that you can make the right decision, of course, depending on your situation. Sounds good? So the question under review today is, should I pay off my mortgage or invest in the stock market? This is an excellent question, and my goal today is to help guide you so that you can make the best decision that works for your situation. The way I want to respond to this question is to go over the pros and cons of the two investment options. That's whether to pay off your mortgage or to invest in the stock market. But before I go into the pros and cons, I have two preconditions. That's, if you have not done this yet, don't even think of paying off your mortgage loan. The first condition is that you must not have any outstanding debt. If you still carry high interest rate credit card debt or any consumer debt, then it doesn't make sense to try and pay off your mortgage. So that's one. Number two, if you do not have any emergency funds saved, then you shouldn't even talk or think about paying off your mortgage. So those are the two preconditions. You must have paid off all your other debt, and you must have at least 6 months for emergency fund. If you are a homeowner and you do not have any other debt, and you are fully funding your retirement, and you are sure you are on track with your retirement goal, then it may make sense to try and pay off your mortgage. What I mean by a retirement goal is this. Depending on your situation, depending on the lifestyle that you want during retirement, you should know how much you'll need to sustain you throughout your retirement life. Hey, be careful, because with life expectancy of 80 years and more, you need to be sure that whatever you plan will be sufficient for you so that you do not run out of money during retirement. So whether it's 500k or 1 million, look at your current saving and project maybe at the rate of 6% annualized growth and decide if you are going to reach your goal. So that's what I mean by retirement goal. So if you are behind on your retirement, or you are still in any other types of debt, then don't even think or talk about paying off your mortgage. So now let's say you are on track, you are fully funding your retirement, and you are now asking this question. I believe this is a good problem to have. At least we are not talking about, hey, should I go and get home equity loan so that I can pay off certain debts? By the way, that's another commonly asked question that I get. So let's go back to the question of today. Do I pay off my mortgage or invest in the market. Like I said, I'm going to go over pros and cons, and I'll let you decide which one works best for your situation. I have 4 points when we consider paying off the mortgage. The number one is you get the peace of mind. Imagine never having to send thousands of dollars to your bank every month anymore. You'll be able to have more money at the end of each month, of course. And this is the money that you can now invest in the way you prefer. And of course, you eliminate the risk of foreclosure by not having any loan on your property. And if you look at it, the mortgage for most people takes about 20 to 30% of their income. So imagine not having any mortgage. That means you have about 20 to 30% of your income that you can save, that you can use for anything you so desire. So that's the first one, peace of mind. Number two, it provides some psychological benefits. For me personally, I have never met anyone that regrets ever paying off their mortgage loan. So if you are without any mortgage debt, it gives you some emotional and psychological satisfaction to know that you are debt-free. You can sleep better at night with no mortgage payment. And this is a common saying that the grass always feels different when you step out at your backyard because now you own the property. So that psychological benefit is also something that most people talk about when they think about paying off their mortgage. Number three, the home can appreciate. Most properties do appreciate eventually. So let's say you bought your home at $250,000, $250,000, and after 15 years, it's possible that that property would have appreciated to about $400,000, given the current trend of property appreciation in the country. So if you've paid off that $250,000, that means you have $150,000 extra money that the property can generate for you in case you decide to sell it. So home appreciation is another benefit of paying off the mortgage. Number four, interest savings. So depending on the value and the loan term of your mortgage, you may be paying anything between $500 to $2,000 in interest expense to your bank every month. Now imagine not having that mortgage payment anymore. That means you are not paying any money to your bank. So paying off your mortgage early frees up some money that you can use in the future. If your mortgage rate was 4% and you've paid it off, now the money will go to your account. You will no longer need to send any money to your bank, and you can now invest that money. This can save you tens of thousands of dollars every year in interest savings. So that's another benefit of paying off the mortgage. So 4 points. You get a peace of mind. There's a psychological benefit. The home can appreciate, and you save money on interest payment to the bank. So now let's go to the cons of paying off your mortgage. I have 4 points to share on this. The first one is mortgage interest deduction. And this is a little bit difficult for me to categorize because to some people, the mortgage interest deduction is a benefit, while to others, it's not so much of a benefit. So again, this depends on your situation. So when we talk about mortgage interest deduction, what do I mean by this? This is the money that the US government lets you deduct from your mortgage interest when you are filing your tax. So this is like a tax break for most people, depending on where you live and the value of your home. Some people keep the mortgage for the purpose of getting the mortgage interest during the tax season. But the truth is that you are only getting a fraction of the interest that you pay to your bank. Here's the way it works. For every $1 that you pay in interest, the government will give you about 40 cents in return. So you are still losing like 60 cents of your money. So for this one, depending on what you feel, it can be a pro or a con. Number 2, cash strapped. That's the second disadvantage of paying off your mortgage. To me, it's not of much benefit to having all your money tied to your home. If you lose your job or you suddenly need to raise money to take care of some emergencies, there are only 2 ways you can now get cash. Either you borrow against your home or you sell your home. Since you are trying to pay off your mortgage, now it's going to be counterproductive to go back and borrow money against your home. But there is another complication. If you lose your job, it's unlikely that you'll be able to obtain a loan against your home if you are unemployed. During a period of prolonged unemployment, your only choice may be to sell your house if cash is especially tight. So if you are planning to pay off your mortgage, please don't ignore the need to build up a fund, your emergency fund, that will see you through a prolonged time of unemployment. It is not a good idea to be cash poor and house rich. So let's say your property value is worth $500,000 and you have less than $1,000 in your account. That's not a cool situation to be in. So be careful. Make sure you have your emergency fund before you try to pay off your mortgage loan. Number 3, there is lost time in the market if you focused mainly on paying off your mortgage. Historically, the US stock market has returned around 8 to 12% annually for over 80 years. This year it's on track to do like 16%. That's the S&P 500. We are still in November. Nobody knows what's going to happen. Last year it was going well until around December, when the stock market suddenly experienced like 10% decline. So until December 31st, nobody can tell how this year is going to end. So let's assume that you can pay off a 30-year mortgage in 15 years by making maybe extra $1,000 on your mortgage payment, and you complete the payment in 15 years. And now let's take a look at the alternative. If you had invested that $1,000 extra every month in the stock market, and if you can get 10% per annum in return, in 15 years, guess how much you are going to have? You will have over $400,000. It is highly unlikely that your property will appreciate by that much within the same period. Even if you are getting only about 8% returns, you'll still have $350,000 in 15 years if you are saving $1,000 consistently every month. So that's another disadvantage. You are losing time in the market. Number 4, you can't run away from risk. Before the economic meltdown of 2007 and 2008, everyone will assume that your own price will always go up in value. The financial recession has taught us otherwise. There are some places in this country where property value actually declined by over 50%. Imagine you have a paid off mortgage and that event occurred, and your property is now only worth half of what you paid. It's true that many of those properties have recovered since, but there are still some places where the properties are still underwater till today. So life is full of risk. Even if we don't experience any housing bust like we did in 2008, look at what is going on in California with the Kincade fire burning, or Texas with the flood event. I know insurance company will cover some of the losses, but the truth is that the insurance company will only pay you what they consider fair, which may not be adequate for you. So life is about risk sometimes. So that's the cons, the disadvantages of paying off your mortgage. The first one is mortgage interest deduction. The second is you become cash trapped. The third is you lose time in the market. And the fourth is that you are trying to run away from risk, but there are risks everywhere, even with paying off your mortgage. Now let's go into the pros for investing. Why should you invest? The number one reason is the compound interest. According to Albert Einstein, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. So the best way to gain that compound interest benefits is to invest your money into an investment vehicle that will generate returns for you every year. Try not to harvest that return, that's don't cash out. Reinvest the gains from year to year, and you'll soon find yourself in a position where your investment can generate enough income to replace your active work. And that's financial freedom. That is the stage where you can claim to have reached a financial freedom status. And you can do that by investing in the market and allowing your returns to stay in the market and ensure your money continue to work very hard for you. So one of the best advantage of investing in the market is the opportunities that compound interest will provide for you. Number 2, wealth creation. If you learn how to invest properly, you can come out better than paying off your mortgage loan. What I mean by this is that most mortgage interest rates at this point are around 5%. By the way, if you are paying more than 5%, you should consider refinancing your mortgage loan. Meanwhile, if you invest in the stock market, even if you generate a return of only 7 or 8%, you are still better off with investing. Guess what? A paid off mortgage will not earn you any money. But investing in the market, you get extra money in form of dividend or capital appreciation. And you can make money every month or every quarter or sometimes annually, depending on the type of investment that you have. So there is an opportunity to create wealth by investing in the market. Number 3, liquidity. So if you get into any emergency, God forbid, and you quickly need to raise funds, your investment in the stock market offers easy access to liquid cash better than your home. On the other hand, if you put most of your money on your mortgage, then it becomes a risk. Let's take a look at paying off your mortgage. If you put most of your money on your mortgage, you are taking some significant risk. If you need to move for job-related purpose, and if this happens during a soft real estate market, whereby maybe the properties are not selling fast or the property values have declined a bit, you may end up losing money, or worse, you may not be able to sell as fast as you love to. if maintaining liquidity is essential to you, then you'll do well to have some money in emergency funds and, of course, in the stock market. So it makes sense to have some of your net worth in liquid assets. And what are liquid assets? These are assets that can easily be converted into cash, such as stocks, marketable securities, and mutual funds and bonds. A house is not a liquid asset because it can take months or even longer for a homeowner to sell their property. Even if you can take some home equity line of credit from your home, it will take days or weeks to go through the process because the banks will need to assess your home to determine the value so that they will know how much you can actually take out of the home. Meanwhile, selling an investment will only take a day for you to do. So those are the pros for investing. The benefit of compound interest, you can create wealth, and you have easy access to liquid cash. The disadvantages of investing, the one and only one is the risk. Nobody can guarantee the returns in the stock market. I know the past 80 years or so, the US stock market has returned 8 to 12%, but past performance is not always a guarantee that it will continue to the future. Anything can happen. Look at trade war goings. There are many uncertainties in this world. So placing a bet on the returns of the stock market is a significant risk. But a paid off home is a guarantee. There are no other risks on that property. You cannot be foreclosed. Of course, you must pay your property taxes, your HOA, and your insurance every year. The point is, there are a lot of risk and volatility associated with the stock market. Your home value will not fluctuate as much as your investment will do. So if you are not someone that can bear the risk, investing may not be the best approach for you. But having said all this, we've looked at the pros and cons of investing or paying off your mortgage. I believe there is a compromise. There is a middle ground that you can strive for. Paying off your mortgage or investing in the market, these are responsible things to do. Determining which one should take priority can be tough. You have listened to the pros and cons. Ultimately, I'll say on the choice of investing or paying off your mortgage, I think you should do both. Yes, you choose the middle ground. It does not have to be either or situation. You can work towards paying off your mortgage and at the same time stay invested in the market. What I mean by this is, let's say you need to pay extra $1,000 towards your home in order to pay it off maybe within 10 years or so. How about just putting $250 extra payment and maybe putting the rest in the market? Of course, there are several factors you should consider before making that decision. Your age, which is very, very important. If you are a 25-year-old guy, then you still have a lot of time. You can easily do both. You can pay off your mortgage and at the same time, you can invest in the market. If you take on a 15-year fixed loan, by the time you are 40, you have a paid off home. And at the same time, you are investing in the market and you are reaping the benefit of the compound interest. So that's good. But on the other hand, if you are a 55-year-old man, you have to consider, are you okay to paying mortgage till 65, till 70? Are you comfortable with it? That's a question you need to ask yourself. If you are not, then paying off your mortgage may be the best option for you. The second factor, of course, is your risk tolerance. Are you okay with the fluctuation, the volatility that comes in the stock market? If not, maybe paying off your mortgage is a better approach. Above all, what are your priorities? You need to assess your priorities. What is the most important thing to you? So it's a personal decision at the end of the day. So what's my recommendation? To me, if you do not have any prepayment penalty on your mortgage, and if you have extra money, you should consider chipping away at the principal by making any extra payment that you can afford every month. This way, you can save a significant amount of interest and shorten the life of the loan while still investing and generating wealth in the market. Let's face it, your home is not an investment, at least not if you are living there. If you have a rental property, yes, that's an investment. The truth is, your home is a liability because you have to spend money to take care of your home. In closing today, paying off your mortgage is a responsible thing to do financially, but you need to ask yourself, is it in the best financial interest for you? You need to assess your situation. Are you 25 years or 60 years? Are you comfortable making mortgage payment at age 65? According to financial experts, paying off your mortgage early actually comes with its cost as well. This is because the amount you'll save in interest likely won't exceed what you will earn in other long-term investment in the stock market. Investing in the market has its own risk as well. The financial recession of 2008 is an example. If you are about to retire then, you would have experienced about 40% loss in your investment portfolio. So you have to make sure you balance the risk by moving to bonds or annuity. Stocks tend to be more volatile. So when you are approaching age 55, age 60, you need to rebalance your investment portfolio and make sure you are investing and putting more of your money in fixed investment accounts. Check out episode 41 of this podcast to learn more about how to create a fixed income portfolio. For investment to make more sense than paying off your mortgage early, the annualized return over many years will need to be higher than the mortgage interest. Paying off the mortgage loan may particularly be suitable for those people that are not comfortable with the volatility in the stock market, because really, it's not unusual to see that your portfolio was worth $500,000 in January, and by August in the same year, that $500,000 may just be worth about $450,000. That's about 10% drop in the market. So make sure you balance your risk. Make sure you have emergency funds saved. The emergency fund should be about 3 to 6 months of income. And if you can start making extra payment towards your mortgage. But at the same time, make sure you are investing and you are on track to meet your financial goals towards retirement. I hope I've been able to serve you today. Now you can decide whether paying off your mortgage or investing in the markets is best for you. Assess your situation based on the pros and cons that I talked about and make the decision that works best for you. Till next time again, don't forget to rate and review this podcast so that we can attract more listeners. Now, go win.
This episode of Winner's Ways podcast has come to a close. We hope you enjoy and learn something from today's show. We want you to win and excel in all areas of your life, and we regularly explore and share information with our listeners to empower them to win. Be sure to subscribe to our podcast for more tips and strategies to help you find the success that you've always dreamt of. And don't forget to rate and review so that we can continue to bring you more podcast episodes to empower you. We will love to have you again next week. Now, keep winning.